Hello everyone, Cash King here, back with another video. And today we're going to be talking about some investing advice from a few famous billionaires. So don't forget to like, comment and share the video and subscribe to the channel. And let's get cracking. Firstly, we've got Warren Buffett, or as I like to call him,
Buffett the stock market slayer.
Now, this guy is one of the most famous investors in the world. But how does he do it? Let's have a listen.
Yes. I have an old-fashioned belief that I should expect to make money in things that I understand. And when I say understand, I don't mean understand, what the product does or anything like that. I mean understand what the economics of the business are likely to look like 10 years from now or 20 years from now.
Now, I think this is a basic point, but it's an important point. Fundamentally, if you don't understand the investments you're making, you're not going to make any money. A lot of people want to see what's popular and jump on the bandwagon when it comes to investing. But fundamentally, if you don't understand the future of that sector or of that business, you shouldn't really make the investment. Because that's not investing, that's basically gambling. Let's see what else Buffett has got to say.
I've always said the easier thing to do is figure out who loses. And what you really should have done in 1905 or so, when you saw what was going to happen with the auto, is you should have gone short horses. There were 20 million horses in 1900, and there's about 4 million horses now. So it's easy to figure out the losers. The loser is the horse. But the winner was the auto overall.
Now, I love this point he's making here. All too often, as investors, we want to jump on what's hot, we want to see what's going to rise in price in future, and we want to see what's going to be big. But we often forget what industries are going to fall by the wayside, what industries are going to lose value and become defunct. Companies in dying industries are opportunities as well. So as new players emerge in a market, who are the players that are going to get squeezed out?
Unless I know who's going to win, I'm not interested in investing. I'll just play around on the computer. Defining your circle of competence is the most important aspect of investing. It's not how large your circle is. You don't have to be an expert on everything. But knowing where the perimeter of that circle of what you know and what you don't know is, and staying inside of it, is all important. Tom Watson Sr., who started IBM, said in his book, he said, "I'm no genius," he said, "but I'm smart in spots, and I stay around those spots."
Again, another great piece of advice. Stay within your circle of competence. If you're competent in a certain area and you know what you're doing and you've built up experience and expertise, why step out of it? Look for opportunities in your area and execute them.
And whether we're buying all of a business or a little piece of a business, I always think we're buying the whole business because that's my approach to it. I look at it and say, what will come out of this business and when? And what you really like, of course, is them to be able to use the money they earn and earn higher returns on it as you go along. I mean, Berkshire has never distributed anything to its shareholders, but its ability to distribute goes up as the value of the businesses we own increases.
Now, in my experience, it's relatively easy to look back in a company's history and look at their accounts, look at old news articles online, see what they've been up to, and see what's gotten them to where they basically are today. But trying to predict a company's future can be very difficult. There are things you can do though. You can look at their strategy, you can look at their forward-looking statements, you can look at what products and services they've got coming out in the pipeline and what they're doing to evolve them in the future. There are things you can do.
So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. But in those days I was buying cheap stocks, and Berkshire was selling below its working capital per share. You got the plants for nothing, you got the machinery for nothing, you got the inventory and receivables at a discount. It was cheap, so I bought it. And 20 years later, I was still running a lousy business, and that money did not compound.
Now, I really like this advice, and I use it to decide on what investments I want to make. If I look at a company and it's merely mediocre and I'm really not sure about it, it goes on the back burner. But if I look at a business and I'm really excited about their products and services, I'm really excited about what they're doing, and I think they're genuinely a wonderful business, that's definitely something to seriously consider putting a position in on.
You will see things you won't believe in your lifetime in securities markets. And the country will do very well over time, but you will see these huge waves. And if you can stay objective throughout that, if you can detach yourself temperamentally from the crowd, you get very rich. And you won't have to be very bright. I mean, I'm sure you are, but
Now, I've got to say, when you do detach yourself from the crowd and manage to stay objective, it can work fantastically, as Warren Buffett says. But, the thing is, it is actually incredibly, incredibly hard to do. To try and not move with mob and crowd movements is so difficult. It goes against all of our instincts, but if you manage to do it, it works incredibly well. It takes time, and when you go through some market turmoil as an investor, you do get some experience, and that can help. But this is definitely something to remember.
But we intentionally keep our units small. We think we want them to have the nimbleness, the responsiveness to the customer particularly, that will turn them, that essentially will more than offset anything that the scale of having maybe a little more purchasing power or something will develop.
The point Buffett was making here was that good businesses always revolve around the customer. Always. And if you invest in businesses that are doing this, that's definitely a good sign. Next up, we've got
Big Bucks Bezos.
Or Jeff Bezos for short. The head honcho of Amazon and one of the richest men in the world. So I've had a look online and in various places of any advice that Jeff Bezos has given investors, and I came across this one clip, which is definitely very pertinent. So let's take a look.
Your stock is actually up 70% this year. Is there one thing that you think is responsible for that, or several things? Because 70% is pretty good.
No, I have been lecturing. We have all hands meetings at Amazon, and for 20 years, ever since we've been public, 21 years now, in 1997, at almost every all hands meeting, I say, look, when the stock is up 30% in a month, don't feel 30% smarter. Because when the stock is down 30% in a month, it's not going to feel so good to feel 30% dumber. And that's what happens. Never spend any time thinking about the daily stock price. I don't.
So Jeff is talking from his perspective as a CEO, but this is great advice too for investors. If you're truly doing long-term investing, daily stock price fluctuations do not matter. I repeat, they do not matter. If you're in the long haul for 1, 2, 3, 5 years, or even longer, then you shouldn't be constantly checking your account. And lastly, we have
The Muskatron.
Okay, that's the last time I do that. I can't help myself. So, the king of Tesla often talks about entrepreneurship, but not so much on investing. But I have found a tweet that I think is quite important and gives an insight into how he thinks. So in this tweet from 2020, he says the point of companies is products and services. They have no point in and of themselves, nor do these indices. Buy and hold stock in companies where you love the product roadmap and sell where you don't. Product or service roadmaps are very important for companies because they essentially outline what they're going to be doing in future. And if a company doesn't have a good product roadmap and they don't know what they're releasing over the next 1, 2, or 3 years, what's the point of investing? You're investing in an empty shell. Also, when you invest in a company and you love their product roadmap, you're naturally going to be doing more research into those companies and their products and services because of your fascination with them. So this is why it always pays off to invest in companies where you feel like you've got a real stake in what they're doing and when you're genuinely interested in their products or services. So, let's recap the advice we've gone over. 1. Only expect to make money in the things you understand. 2. Sometimes you should just figure out who the losers are. 3. Stay within your circle of competence. 4. What will come out of the business and when? 5. Time is the friend of the wonderful business. 6. Detach yourself from the crowd and stay objective. 7. Good businesses always think of the customer. 8. Don't pay attention to daily stock price changes. And 9. Invest in companies where you love the product roadmap. So that's it for now. Thank you very much for watching. Don't forget to like, comment and share the video and subscribe to the channel for more useful videos on investing. Also, I've put some links in the description box below to some of the interviews these 3 billionaires have given. Best of luck with all of your investments and I shall catch you next time. Cash King over and out.